But there's so much more to personal financing and personal wealth growth and maintenance. And that's why I have my guest, Kara Stewart, today. She is the president and founder of Focus Strategic Solutions. Hey, Kara, how are you today?
I'm great, George. How are you?
Doing awesome. Thanks for coming in, joining us on the show today. It's always great to have you.
Thanks for having me.
Absolutely. You do great bringing a perspective to financial conversation that other financial planners, I think, don't do well at. And so that's part of you being an independent but holistic advisor. Tell us more about your practice.
Absolutely, and thank you. Yes, I started my career, 20 years or so ago at Wells Fargo Bank and worked at Merrill Lynch for a period of time, was also a community market maker of bank stocks, and then a local insurance brokerage for over a decade. But in 2010, I went independent. Mm-hmm. And what that meant was truly the ability to work for my client and not a particular insurance or investment company.
Uh-huh. And that's important, right? So you're looking at it from more like almost a fiduciary responsibility to your clients, right? To them and not to your employer. And so talk us a little bit about how you engage with clients. What are sort of the hot spots that you're seeing in today's financial world that people should be looking at?
Sure. Well, I first like to understand my client's unique goals and objectives. That's where it all starts, because one size does not fit all. And so I have a kind of unique process where I ask specific information. Most often my clients are coming to me with the goal of retirement, either in the near future or in the long term. But the ideal scenario is, at what age do you want to retire and what kind of income do you need to sustain your lifestyle? And I have a software program I put all that information into, which then shows us if that client is on track to meet, exceed, or fall short of those goals. And most often, even if they're on track to exceed or meet, I can improve upon their situation by either reducing taxation, which would increase cash flow, or there's often proposals I can generate that will yield greater success than what they're already currently doing the status quo.
I was going to ask you about that. So when you look at somebody's current financial picture, which probably includes, could any be their 401k or IRAs that they've started with other companies, maybe they've got their own stock portfolio or they have their own whole life or term life or VUL type policies. So do you look at everything in sort of a pie chart and go, hey, you have this sort of distribution of investment strategy that looks like this, but what about if we looked at it like that? Is that a common thing where you're kind of helping people clean up their accumulated financial assets?
I am. However, I do pride myself in my integrity. So if it is, all that can be done, then I'm going to let them know that, and that's even peace of mind. But most often, to your point, yes, I can improve upon what they're already doing by either offering different products or a different design of an existing product, or, there's a specific promotion I'm very excited about that starts next week that is temporary. It's offering a 35% bonus on new money. So if I'm looking at a client who currently has an IRA, for example, you can reposition your IRA without any penalties or taxation into this product and get a 35% bonus, meaning if $100,000 is transferred into it, it becomes $135,000 on day two.
And is that vested immediately, or how long do they have to leave that IRA and that with that? I guess what I'm getting at is the vesting on that. Does somebody go, oh, I'm going to go get 35 grand and then a year later they move it away, or is it their money?
Well, no. So the plan really is to set the stage for future income. Uh-huh. So this type of product has a guaranteed lifetime income stream once income is turned on. So in your example, if it's an IRA, we are still subject to normal IRS regulations, meaning if you take it prior to age 59 and a half, there's an early withdrawal penalty. But that's true whether you leave it in a typical brokerage IRA account or if you moved it to the account I'm considering. But you can withdraw from it if it's a non-qualified account at any time. But to say you can move the $135,000, in a year later, there would be some penalty in doing that.
Yeah.
So again, it kind of goes back to the specific situation what the client's attempting to do, because that is more of a kind of a long-term play. Because again, the whole goal there is to create income. So once income is turned on from this account, you can't outlive it. So again, using that $100,000 example, if you're starting to take income in a brokerage account, you have $100,000 to consume, right? And once it's gone, it's gone. In this type of account, because of the guaranteed lifetime income option, you actually have income for the rest of your life, even once you've consumed the $100,000.
I'm sort of blown away at that. I mean, the 35%, as you used as an example, which is 35,000 on 100K. That's like free money, it sounds like. Why wouldn't everybody do that? That sounds amazing.
Well, that's what I'm trying to get the word out there. It's temporary, by the way. It's only until April 11th. But what they are also offering is any accounts that are opened. Of course, the minimum is $20,000. But any accounts that are opened between now and April 11th actually have 18 months thereafter to add monies that will still get that 35%. So it's kind of a great way to kind of be a placeholder, for example, if you know you're going to be coming into some money in the next 18 months.
Yeah.
Open the type of accounts with the intent to add to it.
Right.
The other beauty of this product is that it's an indexing strategy. So it's not invested in the market like you would see a brokerage or a mutual fund or stock portfolio, where you see those rise and falls in correlation with the actual market volatility. It's tied to an index, like the S&P 500.
Okay.
So it gets to enjoy the upside returns of the index. But when the index is negative, for example, last March, it was down 30%. So I was able to tell all my index clients, not only have you locked in previous bonuses or any positive returns, you have not lost $1, even though the index is down 30%.
Wow.
So it's a great way to preserve capital and not give up that upside potential.
Yeah, wow. And I guess we have some disclaimers here, right? Everyone's going to have their own consultation with you. You are licensed, and that's great, so people can feel confident in meeting with you to learn about what they could qualify for, and see if that 35% incentive is something they'd be eligible for. How will people get a hold of you to learn more about that?
Yes. So we designed a website specific for this product and this promotion. It's called focusonmyincome.com.
Oh, that's great.
You can go there and read more about the product specifically. It also does have built-in long-term care benefits, and there's other ancillary benefits I don't have time to get into here.
Sure.
But you can read about the product, and thereafter you can book a free consultation with me to discuss one specific goals, objectives, time frame, etc.
Great. And give us that website 2 more times just so people can write it down.
Of course. www.focusonmyincome.com. Again, that's www.focusonmyincome.com.
That's awesome. And so that's one of the strategies that you would present with somebody trying to do retirement planning. But there's also other strategies, right? So you get into guaranteed income streams. You get into life insurance as a strategy. Talk us a little bit about maybe a couple common myths with the 401k. I've always been interested to hear your perspective on that.
Sure. So the 401k, we've kind of been led to believe that that's the best retirement planning vehicle out there. And if you think about it, the government wins in that scenario because would you rather pay tax on $1 or $100? Mm-hmm. So 401ks are deferred, so you're paying taxes on a larger portion of your IRA or retirement dollars, and we know taxes are going up.
Right.
So
especially in California.
What I do like about 401ks is when the employer offers a match. So I always advise my clients to understand the matching formula. So does it take 3% to get their 1%? Then by all means do 3% to get that free 1%.
Right. It's free money, kind of like what you're promoting today.
Exactly. But anything above and beyond that should not be put in that type of account because, again, you're just deferring taxes and you're going to pay taxes on a larger portion.
Yeah.
So where do you put that money otherwise? Obviously, the ideal would be a tax-free bucket of money. I talk about the 3 buckets of money: taxed now, tax deferred, and tax-free. Most often, clients don't have money in the tax-free bucket. So what does that look like? Mm-hmm. It typically would come in a Roth. However, Roths have income limits, and most of my clients make too much money. And even if they can qualify, they have contribution restrictions. They can't put more than $7,000.
Yeah.
So
a lot of details.
Right.
A lot of details that we have to look at and go through. And we're going to go into a commercial break, but I want you to give out your phone number. How do people reach you just to have a consultation?
Of course, 707-974-8707.
974-87. Say it again. 974.
8707.
8707. Kara Stewart, President, Founder, Focus Strategic Solutions. You're awesome. Thank you so much for joining us today.
My pleasure. Take care.
All right. Folks, we're going to a commercial break. I'm George Adair. I'll be right back. We're going to talk about cash out refinances in a rising interest rate environment. Stick around.